look at silver and GDX. We got to do something. Silver trade, unfortunately, is not working. But you're starting to see it get some resistance here. Dollar going down today, but so is gold. So let's just check out. Let's do 30 minutes. Yeah, look at that. Look at that. Foreigners coming in. Then our markets open. They start to dump it. We dump it. Phew, down she goes. I think we could. We already have. What do I have? The 90, 84, 85, 88. What do I have? 84s. I got the 84 puts. That's way down here. Unfortunately, those are probably dead. The good news about the good news about those GDX puts is that we bought silver calls against them and brought the cost of it way down. CLV coin? You mean buying you mean buying coins? You mean buying the hard asset of silver? I have silver, yeah. I mean coins, bars, pretty much the same. I wouldn't be buying silver bars now. Where were you when I was calling out silver to buy gold and buy silver on every pullback that happens? Buy gold and buy silver. I know the other Michael did it. I know some of you bought plenty of it. Not just GLD and SLV in terms of stock, but also buying the hard assets. Yeah, we did that. But now is not the time. Now is the time to consider shorting it. So let's see. GLD. Let's do GDX. Well, so we have January 30th. So I have January 30th. I've got the 84s, which is like around here. Not happy about that, but I'm going to hold on to it for now. Next week, I mean, this Friday is 116, too short. So I could go to next week and see if we can close that gap. So where's that gap exactly? About right where I want it. Yeah, 92, 93. So if we look at the options chain for GDX for next week, I bet you're going to see a bunch right there. Let's see. Where are they? 90s, 95s. Kind of like the 95s. So the way to do this is if you're going to buy the 95s and see if you can get them for like a buck 80, 95 puts. We're at 96 and change. Yeah. So if price starts to drop next week, Monday, Tuesday, into the low 90s, like 92-ish, that would mean you're like $3 in the money. If you're $3 in the money, you're going to be able to sell. You're going to sell that for probably $2.50 or $3 to sell. The other call to convert into a vertical. What's your criteria of a cheap put? Well, I guess it's relative, isn't it? I mean, there's super cheap, and that's like less than a buck. And then there's depends on the stock. What's cheap for GDX and what's cheap for Nvidia are two different things. So I can't really answer that. So, and again, Masterclass, don't just follow these trades. Understand what's going on here. Maybe just put them in the tracker, alter the trade, maybe for a small allocation. I'm just letting you sit in here on this conversation. I'm not suggesting that you take every trade that we call out here in this room. If you have questions, feel free to answer. When 20 moving average is crossing the 100, do you consider it as a trigger to go up? Not necessarily. Not necessarily. I think the 20 crossing over the 50 is probably a good, if you're waiting for some kind of a trigger, perhaps. But I don't necessarily like a moving average cross as a trigger. I look for price action trigger. So, if price is here and there's a moving average here, and I see price drop below that moving average, regardless of whether there's a cross or whatever, I'm watching price. I want to see it come back up and retest and then head back down. And that retest, that failure, gives me a lower high. So I've got some wind at my back here. And I can see that this level is no longer a support level, which means I'm free to trade it to the downside. And if it comes back up, I don't have really the fear that it's just going to shoot straight up because it has already failed at that level. So I'd rather use price action than a cross as a specific trigger. So 96, 95, 94. I mean, you could get the 90s, but is that because moving averages are more lagging? Yeah, you could look at it that way. I just believe that the number one indicator is price, always. There is no better indicator than price. Now, moving averages, moving up or down or stacked or crossing can give you a nice confirmation of what you're seeing in price action along with some other indicators. I do like it as a layered approach. I don't necessarily know. And I guess there are times where I'm going to say, all right, you know what, as soon as those moving averages cross to the upside, I'll maybe take a trade. I mean, maybe I'm day trading, but it's really mostly about price. So I'm inclined to just get a put here, like the 95s. And this is for next week. Maybe got some safe haven stuff going on, but I don't mind dipping my toe in the water of it. Okay. 96.90. 96 pretty close to the money there. I mean, it's perfectly fine. Your question should be, does this fit your allocation? 6 wide, 167. First of all, what's your target? So is 90 your target, Dr. Goodfill? Are you using 90 as your short strike because it's a physical target that you're looking to hit, which would be almost the mid? Yes, yes, and yes. Well, then if it's yes and yes, then it works. Yeah. And then what I would also do is put an exit, and your exit should be tight. If price if price eclipses 98.42, in my opinion, you should exit, right? You got to have that exit rule. If it takes out here, the top here, you're out. So, yeah, I mean, if that works for you, then sure. There's certainly a lot of action here. I'm curious as to why you wouldn't just go 95, where there's more open interest and just as good. I think I prefer this trade more better than the 96. Oh, contrarian cross. No, my answer to that would be no. I know some people like that trading methodology. I am not one of them. Gregory, I need a solid setup to go long that has a narrative of why I think it's going to go, like what's going on in the markets overall. What is the market narrative telling me? Can I take that market narrative, look at the specific market internals that might affect that trade or might affect the narrative, which should direct me to the trade. I don't generally just pick a stock because it's doing this or that. That's what you're trying to do, is be a stock picker, and you're trying to time the market, and you're not good enough to do that, and you never will be. The only people that are good enough to do that get paid $10 million a year to do that, and forces that control the markets and insider trading and all that. You're not going to be able to do that. Pick a stock. And just because a moving average does one thing or the other, now you think you're going to take the contrarian trade and be the only one that does it. So what I look for is a narrative that leads me to the market internals. I look at the market internals and see if I can get them all in alignment so that I have the wind at my back. Then I will look at the chart itself for the technical setup of the chart. This to me is a topping pattern. It's overbought. I've got two reversal candles at the top. I've been watching European investment come in the overnight, only to be sold during the cash market. Overnight, cash market. Overnight, cash market. I've seen that 3, 4, 5 nights in a row. And I think the dollar, based on what we saw today with data, that the dollar most likely is going to go higher. And over the next month, 2 and 3, I think metals are going to experience an extreme pullback. So that's my narrative. My market internal is this. So that's why I'm looking at this trade. So anyway, I guess the simple trade here is 95.90 for $1.27. That would be a masterclass trade. The best way to trade this, though, for legacy is to buy the 94s or buy the 93s. 94 is a nice strike. Buy the 94 put. Probably cost you about $1.50. And then if price over the next 2, 3, 4 days moves in the money, then go ahead and sell the 90s or the 89s, 88s, 92s, whatever, and that reduces your cost. Then when you get the final move, your profit is so much better because you lowered your cost from your entry point. Now, it could still go higher, but I'm going to go with, I guess I'll throw Masterclass. No, Gregory. I don't trade oscillator dips. That is not true. Somebody tell them the truth. And then if you don't, I will. All right, I'll throw this in here. Anybody want to answer, Gregory, about that we don't buy oscillator dips? Or you're leaving that up to me? No. How about a better explanation? You guys are funny. 95. Do we buy oscillator dips? No. Well, what do we like? No, I know that's CTV. That's what he's referring to. I'm just, I'll answer him. You guys are really funny. I'll just put 130. I think it's reasonable. Next week's 95.90 puts. Boom. And then here, Legacy, I'll give you one. I like the 94s. If I get it for 150. All right. That's for you, Legacy.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.